Hello students, welcome back. This is Dr. Mercado speaking. Welcome to Accounting 2401, Principles of Financial Accounting. And in this lecture, we are going to continue covering Chapter 13, which deals with the statement of cash flows. In this particular lecture, we are going to be covering Exercise 13-16, which basically deals with the problem in preparing the operating activity section of the statement of cash flow. So we're going to only be focused on one of the sections, which is, in my opinion, the more complex section of the statement of cash flows that we must prepare. Okay, remember that the statement of cash flows is comprised of three sections: operating activities, investing activities, and financing activities. And in this problem, we are only going to be focused on the operating activities section of the statement of cash flows. Okay, so cash flows from operating activities basically report the cash inflows, money coming in, and cash outflows, money leaving the organization from the company's day-to-day operations. Okay, there are two alternative methods for reporting cash flows from operating activities. We have the direct method and the indirect method. Okay, both methods result in the same amount of cash flows from operating activities. It's just that they differ in the calculations or the way that they report the cash flows from operating activities. Okay, so the direct method reports operating cash inflows, which is your receipts, the money that you receive, and the cash outflows, any payments made, as follow. We always begin with our cash received from customers. We subtract cash paid for merchandise. We deduct cash paid for operating expenses. We deduct cash paid for interest, and we deduct cash paid for income taxes to arrive at our net cash flows from operating activities. Now, the primary operating cash inflow is cash received from customers. Okay, the primary outflow is cash paid for merchandise, operating expense, interest, and income tax payments. Okay, now this is a somewhat easy way of calculating your cash flows for operating activities, but this particular method has its disadvantages. Okay, the primary disadvantage is that the data is not readily available in our accounting records. Okay, if we had this information, it would be wonderful because, we could directly report the cash receipts and cash payments for each of the operating activities in the statement of cash flows, but most of the businesses do not have this information readily available, that making it more complicated and costly to prepare, and as a result, it is very rarely used in business practice. Okay, so the direct method is not used a lot. It is rarely used. The method that is more commonly utilized is the indirect method, and that's the one that we're going to be basically focusing on in class. Okay, the indirect method reports cash flows from operating activities beginning with your net income and then adjusting it for revenues and expenses that do not involve the receipt or payment of cash. Okay, so when we are preparing the indirect method for the operating activity section, we always begin with your net income. Okay, we know net income because we do prepare our income statement. Okay, adjustments to reconcile net income or loss to net cash flows from or used for operating activities are listed, and then we can calculate the net cash flows used for operating activities. Okay, there are a variety of adjustments that happen, and we're going to go through those adjustments in the problem that we're going to be covering. Okay, the adjustments to reconcile net income to net cash flows from operating activities include items such as depreciation and gains or losses on fixed assets. Okay. Also, changes in current operating assets and liabilities such as accounts receivable or accounts payable are also added or deducted depending on their effect on the cash flows. Okay. A primary advantage of the indirect method is that it reconciles the differences between net income and net cash flows from operations, all while showing how net income is related to the ending cash balance that is reported on the balance sheet. Okay, the information is readily available. Therefore, this method is less costly to prepare, and as a result, most of the organizations use this. Okay, and this is the method that we're going to be using. The indirect method is what we're going to be using in the problem. Okay, let's jump over to the exercise. Okay, this is exercise 13-16. It says cash flows from or used for operating activities using the indirect method. Okay. It says select data in thousands derived from the income statement and balance sheet of Cardenas Corp for a recent year are as follows. Okay, and then they give you the income statement data and the balance sheet data. Okay, we are being tasked to prepare the cash flows from or used for operating activity section. We're only dealing with the operating activity section of the statement of cash flows using the indirect method. Okay, so in your ebook, you're going to find Exhibit 5. Okay, I want you to locate it in your book. This is going to be kind of like our map of how we are going to solve or calculate our cash flows from operating activities. Okay, it's a guide, so please keep this handy. Okay, so we are going to start cash flows from or used for operating activities. We always begin, if you look down here at Exhibit 5, we always begin with our net income or loss. That is the first line item. If it's net income, it's positive. If it's a loss, it's negative. Okay? So, we're going to have our net income. Okay? So we're going to go over here and we're going to locate the net income, and we have net income of $49,311. Okay. So we're going to bring that in, $49,311, and we're going to bring all of the numbers to the first column. Once we get all of the information in, we're going to figure out our total operating activities, and we're going to bring that to the second column. Okay. Okay, so the first line item that we bring is our net income. Then we have our adjustments to reconcile net income to net cash flows from operating activities. So we're going to go ahead and we're going to bring that line item. Okay, adjustments to reconcile net income to net cash flows from or used for operating activities. Okay. Now we're going to have our adjustments. Okay, we're going to look at Exhibit 5 and we're going to look at the 3 steps. Okay, there's 3 steps in the adjustment process in preparing our operating activity section. Step number 1, okay, expenses that do not affect cash are added. Okay, remember when we calculate or prepare our income statement, we are using accrual basis accounting. Now in this particular step, we are making adjustments only to reflect transactions that were impacted to cash. If the transaction did not impact cash, then we need to adjust. So expenses that do not affect cash are added. Okay, why? Because we subtracted those expenses, but they were not paid with cash. So now we're going to add those back. Okay, such expenses decrease net income, but do not involve cash payments. Okay, such as an example, depreciation of fixed assets and the amortization of intangible assets. Those items are expenses, but they do not involve cash. So therefore, we are going to add those expenses, okay? So, depreciation of fixed assets, okay, depreciation. Okay, so if you look down here, depreciation, positive number, we're going to add that dollar amount. So we have depreciation expense, okay, of $11,580. We're going to add that to our balance over here, $11,580. So all I'm doing is I'm following this diagram down here. The depreciation is going to be added. Okay. Did we have any amortization? No, we don't. Okay. Losses on disposal of assets. If you have a loss, okay, step number 2, losses on disposal of assets are added and gains on the disposal of assets are deducted. Okay, we need to remember that the disposal, the sale of assets is an investing activity. So that information is shown later on in the statement of cash flows. So it's shown in the investing activities rather than the operating activities section. However, such losses and gains are reported as part of net income. So therefore, we want to make sure that we make an adjustment to adjust net income to a cash basis. Any losses on the disposal of the assets are added back to the net income. The same thing is happening. Gains on the disposal of assets are deducted from net income. We don't want to double count, okay? So, if we have a loss, we add. If we have a gain on the sale of the asset, we subtract. So what do we have? Okay. Okay. So what do we have here? We have, let's see. We have a gain on the disposal. I don't know why I had already had that highlighted, 1188. So we have a gain on the disposal of the property of 1188. So it says we have a gain. If we have a gain, we need to subtract. Gain on disposal of assets. Let's look down here. Right here. If we have a gain, we need to deduct. Okay. So if it's in parentheses, it's a deduction. Okay. Gain on disposal of property. Okay, and we said that if we have a gain, we need to deduct, and that would be 1188. Okay. We also have another item, other items involving non-cash expenses that increases. So we're going to add those increases into our operating section. Okay. These are other items. Involving non-cash expenses. So because these were non-cash expenses, we need to add them. Okay. What happened when we prepare an income statement? Regardless whether they were cash or not cash, they were expenses, and expenses get deducted when we calculate our net income. Now these items right here, it says that these are expenses that were non-cash. So because cash was not involved, we already deducted it from our net income. Now we need to add them back, and we had 1383. Okay. The next section we have is step number 3. Okay. Step number 3 are changes in current operating assets and liabilities are added or deducted as follows. Increases in non-cash current operating assets are deducted. Okay. Decreases in non-cash current operating assets are added. Increases in current operating liabilities are added. And decreases in current operating liabilities are deducted. Okay. So we're going to look at the step number 3 section. Okay. Changes in current operating assets and liabilities. Okay. Changes in current operating assets and liabilities. Okay. So let's look at the list. Okay. The first one we have is increases in non-cash current operating assets. Okay. Increases in non-cash current operating assets. Okay. So depending on if it's an increase or a decrease is whether we're going to add or subtract. Okay. So let's look at all of these balance sheet items. It says here we have an increase in accounts receivable, 1,746. So if we have an increase in accounts receivable, we're going to locate it down here. Okay. Increase in accounts receivable. That's what we had. Okay. So let's look. Increase in accounts receivable, 1746. If we have an increase in accounts receivable, we need to subtract that dollar amount. Okay. So increase in accounts receivable, we're going to subtract that amount of 1746. Okay. Okay. So what are we going to do? We're going to evaluate the data. Okay. It's telling us here accounts receivable. That means that they owe us money. We haven't collected. So cash was not affected. Okay. We sold merchandise on account, but we haven't gotten paid. Okay. This is non-cash. So if we have an increase in accounts receivable, we need to subtract that amount in our step number 3. Okay. Decrease in inventory. Okay, we're going to locate it down here. Decrease in inventory. If we have a decrease in inventory, then we're going to add that dollar amount. Decreases in inventory are added. Okay. So all we're doing is we're looking at Exhibit 5 and we have to figure out if we have to add or subtract. So that decrease of 990 in inventory, okay, so we have a decrease in inventory. We're going to look at our table. Decreases in inventory are added, okay. Next we have an increase in prepaid expenses. Increase in prepaid expenses. So we're going to locate, we have an increase in prepaid expenses, okay. If we have an increase in prepaid expenses, we subtract, okay? And we have we have an increase in prepaid expenses, okay? An increase in prepaid expenses of 605. That means we're going to subtract 605, okay? And that is 605. And why am I deducting? Because it says here that if you have an increase in prepaid expenses, you have to subtract. Okay. Okay. Next we have a decrease in accounts payable. So let's go down here and let's locate a decrease in accounts payable. Okay. Decrease in accounts payable is right here. Decrease in accounts payable. If we have a decrease in accounts payable, then we have to subtract. Okay, so those $710 need to be subtracted. Okay, decrease in accounts payable, and that would have to be subtracted, $710. So it's just a matter of following Exhibit 5 and whatever it tells you to do, whether it's add or subtract, that is what the adjustments that you have to make up here on your actual statement of cash flows. Okay. Last but not least, we have a decrease in accrued and other liabilities. Decrease in accrued liabilities. Okay. So if we have a decrease in accrued expenses, okay, we're going to go ahead and we're going to subtract. Okay. Decrease in accrued and other liabilities, we're going to subtract. Okay. So, decrease and we have $995 right here. Remember, if we have a decrease in accrued liabilities, we need to subtract. okay? And we're subtracting 995, okay? So that is all of the information that was provided. We've used all of it up. We're starting with our net income, okay? So everything has been used up. Now we can calculate our net cash flow from operating activities. Okay. So we're going to go ahead and we're going to add all of these dollar amounts, okay? Because I am using Excel, I can just do a formula, or you can just get a calculator out. Okay, I'm going to add them, and that gives me $58,020. Okay. So my net cash flows from operating activities is $58,020. Okay. So what do we do here? We are just following this template on Exhibit 5. You always start off with your net income or loss. You make some adjustments to reconcile net income to net cash flows from operating activities. There's 3 steps, okay? The 3 steps are outlined in your book. You follow the 3 steps. The more complex is that step number 3, where you have more of the items and you have to determine based on their increases or decreases if you're going to add or subtract, okay? So you complete those 3 steps, and then you can calculate the net cash flows from operating activities, okay? That is requirement A. Requirement B says interpret your results in part A. Okay. So let me move this down. Let me delete this. I don't want to delete that. But let me delete this. So now we're going to be doing part B, which is analyze the information. Okay. So it says interpret your results. So based on the statement of cash flows, the operating activity section, our cash flows, which means cash received, because it's a positive number, is $58,020. So we can say that Cardenas Corp is doing fairly well financially. Okay. The company has positive earnings and positive net cash flows from operating activities. So if we can see here, we have net income of $49,311, which is a good sign. We have a positive cash flows from operating activities of $58,020. So that shows that the company is doing well, okay? We can also see that the increase in accounts receivable is a positive sign, indicating an increase in sales. So if our accounts receivable increases, that means that we are selling. It's just that they haven't paid us yet, okay? But hopefully we're going to do our job, and we're going to inquire, and we're going to make sure that we get that money collected within 30 days. Let me just fix this. What else is happening? Well, if we can see here, we have a decrease in accounts payable. Decrease in accounts payable of $710. So what does that mean? That means that we're paying down our debt, okay? Our accounts payable is decreasing. So that means that we don't owe as much money, okay? So this is a completed operating activity section of the statement of cash flows. This is just the first section. We still need to complete the other 2. Remember that we have 3 sections: operating, investing, and financing. This particular problem only covers 1 section, which is the operating activity section, okay? And we are using the indirect method, okay? So when you are completing your statement of cash flows, I highly encourage that all of you print this out, Exhibit 5 on your ebook. That way you know if you need to subtract or add when making your adjustments, okay? So this problem provides you with exposure in one of the sections. Now the next problem that I'm going to be covering is going to be a completed statement of cash flows, okay? So stay tuned for that. If you have questions or concerns, do not hesitate to reach out to me. And until the next lecture, have a wonderful rest of your day.